Hello, we are Team 23 and we will be introducing our Starbucks investment plan to help you decide if you want to invest or not in this company. For that, we will go through the company profile, followed by its financial analysis, its stock market activity, and to conclude our investment decision. First, let's talk a little about the company's history. Starbucks was founded in 1971, but was limited to one shop in Seattle. And it's only in 1987 that the company officially became Starbucks Corporation. Now it is the world's largest multinational coffee chain, with over 35,000 stores in 83 markets. Starbucks stores exclusively sell their own brand of coffee, ground or bean, tea, beverages, pastries, utensils, and coffee machines. But the company's main aim is to deliver a consumer experience. In fact, they aim to offer its customers a unique service that they will not find in any other chain's coffee shops. From the beginning, Starbucks chose to be a different kind of company that not only celebrated coffee and its rich tradition, but also fostered human relationships. Starbucks' mission is to inspire and nurture the human spirit, one person, one cup, and one neighborhood at a time. The company tries to differentiate from its competitors to attract more customers by adapting their offer depending on the country. For example, they launched a mug collection called You Are Here, personalized with the city's graphic codes. It also offers foods and drinks adapted to the local culture, such as café crème in Switzerland, which is a typical drink of the country. In recent years, Starbucks has made its brand available in supermarkets around the world. This allows customers to consume a Starbucks product at any time of the day, even without a lounge nearby. With regards to Starbucks 2022 results, global comparable store sales increased by 8% with an increase of 12% in the US and North America more broadly. Though there was a 9% decrease in other countries, Howard Schultz, Starbucks CEO, was satisfied with these results. For the future, he plans to invest more profit into their people and stores and continue developing their connections with their partners. However, this year on the Red Cup Day where anyone that purchases a holiday beverage in the US or Canada receives a free plastic reusable cup, Starbucks employees, named partners, decided to go on a strike to protest about their working conditions. This may have negative consequences on the company's revenue and consequently on its financial ratios.
Financial statement analysis. The first thing we see when analyzing its financial statements is the income statement analysis. Here we find that in sales, gross profit, and net income, Starbucks has experienced a constant growth, being in sales a 10% growth from 2019 to 2021, a 2% in gross profit between those 3 years, and a 17% in net income during those 3 years. We can state that Starbucks has proven to be a very consistent company in generating revenue and in following its increasing trend, and also a very profitable one managing its costs. Regarding its assets, we can see that Starbucks has increased that number from 2019 to 2021 by 63%. This is primarily driven by the increase in retail operating stores in the USA. We can also see that liabilities have also increased 44% this year due to an increase in the long-term debt it has raised. If we take a look to its net cash from operating activities, we can see that it has also increased at 19%. Net cash from investing activities has increased from -1,000 to -300, and net cash from financing activities has increased from -10,000 to -3,000. As a result of the increase in cash from operating, investing, and financing activities, we can see that overall net change in cash has also been positive, meaning the company has had good financial health, and this results will have a very good and positive impact on the ratios we will study later. But before moving to our investment decision, we have to take a look first at the stock market activity in that last years so we can make an appropriate investment decision in the future.
Moving on, it's a known fact that Starbucks always has an excellent stock market presence. The graph on the left represents Starbucks' stock price 10 years ago, which stands at $25.60 per share. Fast forward 10 years, and the stock price is almost 4 times more, standing at a commanding $97.95 per share. A few key events that are worth going over in Starbucks' history regarding its stock price can be November and December of 2015, where Starbucks overperformed. They sold much more than expected, which caused the share price to rise 6.62% that day. As expected, COVID affected Starbucks as heavily as it did with all other companies. Starbucks began the year 2020 with a share price of $93.62. As soon as the pandemic began, the share price nosedived into a value of $58.03 per share. This caused Starbucks to close many stores, but Starbucks ended 2020 strongly as the share price reached $103.28 per share before the end of traumatizing year. A good reason to invest in Starbucks is the fact that they pay dividends. The current yield is 2.07%. Starbucks pays out $0.53 and they pay that out quarterly.
Investment decision. When making an investment decision for Starbucks, we have to first look at 4 key aspects: its profitability, its efficiency, its liquidity, and its solvency. Its profitability sets that Starbucks has proven to be 2.4% more profitable than the industry average. So we can say that expense management is a strength for Starbucks. On the second hand, efficiency is also a strength. Starbucks is 8.1% more efficient than its peers in asset turnover. It's getting the most use of its assets deployment. Third, we can see that liquidity is also a strength for Starbucks. Starbucks' current ratio is 1.2 versus 0.96 of the industry average. So we can say that overall it has better position for satisfying its short-term obligations. And last, its solvency, we can see that it is weaker. This is because Starbucks' financial leverage is negative because of its negative shareholder equity. This is something that increases the company's risk because liabilities are greater than its assets. But we have to say that the negative shareholder equity account is caused by a past policy of share repurchases and dividend payments massively. So the thing is that this policy has now stopped, and if Starbucks continues to generate cash and grow at this rate, this negative shareholder equity will turn to positive in very little time. Now, if we look at DuPont analysis of its return on equity, we can see that Starbucks has outperformed the industry in its return on sales, in its asset turnover, and its return on assets. But when it comes to financial leverage, as we have explained, due to its negative shareholder equity and consequently liabilities being greater than assets, here we have a negative number of Starbucks compared to the industry value. This is the main cause of a return of equity being negative. But as we have stated, because this policy has now ended, the policy of repurchasing stock and paying massive dividends, Starbucks will now be able to turn this return on equity positive in very little period of time. So overall, our investment decision is based on 5 keys. First of all, the strong ratios in profitability, efficiency, and solvency. Second of all, the return on equity issue will recuperate with this new policy of not repurchasing as much stock as before. Third, the rise in number of stores. Starbucks is increasing the number of operating stores in USA, which will drive its growth up and up. Fourth, the new CEO Starbucks is hiring on 2023, Laxman Narasimhan, will have a great and positive impact because it has a very good background and lots of experience in this sector. And fifth, Starbucks is actually at a very low stock price due to the Red Cup Day strike. When agreements on these strikes are taken, this value, the stock price of Starbucks, will rise and make your decision worth it. So don't think about it. Invest in Starbucks.
Thanks for listening. Hope investing in Starbucks sounds like a good idea now. Have a nice coffee.